When the RSI goes below 30, it's oversold and you should buy. When the RSI goes above 70, it's overbought and you should short. What terrible advice. Here's how you actually use the RSI. The problem with the RSI and most other indicators is they're taken too literally. The RSI tells you the speed at which price changes. It's just plugging the numbers you already see on your chart into a formula. If the price moves too sharply, it'll tell you that it's overbought or oversold, meaning it needs to cool down. That's it. There's no magic. Price can stay overbought or oversold for extended periods. It could even mean that you should trade in that direction. Does this mean the RSI is useless? No, the RSI is a great tool. Use them for divergences. If we're making higher highs but lower highs on the RSI, this tells us that bulls are losing momentum, and this could be a great short with other confirmation. Don't use the RSI and other tools as buy and sell signals. Use them to complement your analysis. This is how you get fantastic results and grow as a trader at the same time. Like and follow for more real trading advice.